Hey, Wall Street winners. Time for our Wall Street winners newsletter for May the 30th, 2022. What can I say? I told you there'd be a rally. There was a rally. Now, the question really is, when is this rally going to be over? The power of it, particularly Thursday and Friday, was very impressive. So I think there's more to go on the upside. That momentum alone is enough to carry it for a few more days. But believe it or not, it's not going to go much beyond this week. Take a look at the volume on this chart down at the bottom. Notice that volume went down as the price went up. That means that this rally is a short covering rally. It's not new longs coming into the market. It's people taking profits. And then look at the purple predictor, remained very negative. So this doesn't look like it's going to be much of a rally at all. We did see buying pressure finally match selling pressure here in the Dow. So that's a bit positive, but really not that positive. The NASDAQ finally broke above these highs here. Once again, look at the volume is low on this rally. That means it's an unsustainable rally. And this market's going to go, maybe early in the week we rally some more. But generally speaking, this rally will be short-lived. Over here, I showed you this is the reason we were looking for the rally. This is a weekly chart, so we've rallied pretty sharply. Over here, I think we can get up to these old highs over here, about 12,500. That might be a target, might even get as high as 1,300, but that's about it as far as the NASDAQ is concerned. Now, our seasonality, a little bit of a change here. We're in the middle of the summer, which is normally neutral, so we can't really even be bullish seasonally for the stock market. But utilities, this is when utilities are normally bullish. So I'm going to put in a buy signal here. If we break above these highs, I'm going to switch our indicator for seasonality for utilities bullish, and of course we'll start getting more aggressive in the ute sector. The other reason why we were looking for a rally last week was because the seasonality had a little bit of a bounce up there. That bounce has basically come to an end. You can see it's microscopically sideways, but then, a sharp seasonal decline into late June. Basically three and a half weeks of bad news. Then we're going to start a more significant rally, okay? But we're not there yet. This is wave one of the major bear market. Asset allocation, we got some money out of the bond market. Stock market risk indicator, they took it out of the bond market and they put it into things like NASDAQ stocks, S&P stocks, and not so much into the conservative stocks. Global shares actually starting to lead on the upside, being stronger than the U.S. stocks. That's the first time that's happened in quite some time. But once again, this should be a short-lived rally. Yield curve, I've hammered on this, but notice the yield curve is getting flatter. Now, it's not, we have to get all the way down here for the 3-month versus 10-year to become negative. So it's got a long way to go. But as you can see, 2s, 10s, a little bit positive, but this coming down is actually going to be what causes us to have another sell signal in the yield curve. Bonds are rallying, as we told you, or at least fully paid up members, we told you, but we're telling you here as well in the freebie section. But this is a very weak rally. And I'm surprised at it because the factors are bullish. The purple predictor is bullish, but it's not rallying much at all. And look at how the volume is going down on the rally. There's something wrong here in the bond market. Obviously, inflation is going up. Everybody wants I read all the time and people are saying, oh, well, it's going to peak here very, very soon. It's not going to peak until maybe next year, maybe end of next year, we're going to see inflation peak. These people are hallucinating. Okay, bond key factors. CRB is still going up. Everything else is going down. So look for lower 10-year yields. And if that's the case, then dollar's going to go down. And so I told you about the major counter trend move. The big bull market's still in force, but this is a major counter trend move that could take us all the way back into this zone here. In other words, below 100 on the dollar index. That would mean that gold would rally, but gold's not going to surmount these highs up here for any time soon. Right now, we're starting to see 10-year yields come down, so that's bullish for gold. We're starting to see, and inflation's going up. That's bullish for gold too. So two things are helping out gold here. But once again, I look at it and I say we have bullish fundamentals, but the price is going nowhere. Not impressed. Not impressed. Our gold key indicators switched to 2 bullish, and even this one, which is neutral, is actually making higher highs and higher lows. So we actually have almost 2.5 bullish factors. Fully paid up members, I'm going to show you another bullish factor. Crude oil, you know I'm bullish on it. I think we're going to go back up to the old highs here. The economy remains good. There are symptoms of weakening, but the Saudis are not, we've got the U.S. desperately pleading for the Saudis to pump more oil, and they're not. After Biden, kind of pissed them off, they're kind of saying, you know what, we're not taking your phone calls anymore. And so they're literally not taking the phone calls of the President of the United States. And as a result, the price of oil keeps grinding higher. And it's going to continue to grind higher. Bitcoin, very interesting. So, we broke these lows here, which means we should be short. But I can't get real bearish here, because the purple predictor rebounded, but this consolidation means we should still be short, but only a small position. Let me explain. The trend is clearly down. Okay, the trend is clearly down. So if the trend is bearish, we must be short. That's how you make money in any market. If it's a bull market, you buy. If it's a bear market, you sell. And if it's a neutral market, you get back into the pool and order another pina colada. You got it? That's my whole trading philosophy in one sentence. So what do we have here? A clear bear market. And usually when we get a consolidation like this, it's broken in the direction of the bear market. Take a look at volume. Volume is pretty low, once again, suggesting a break to the downside. But the smart money came in and bought, so I can't get really super bearish at all. I got to be bearish because that's what the trend is, but I can't have a big position on the short side at all. All right, freebies, we love you. Hey everybody, Courtney Smith here, and I just looked at our portfolio for this last week. This is for fully paid up members. Freebies don't get the extra analysis. They don't get the specific trades. 8 out of 9 of our current open trades made money last week. You see, Wall Street Winners doesn't cost you anything. It pays you money. So subscribe now. You know what to do. Have a good time. And come on, sign up with us, become a fully paid up member, and start making money in this stock market instead of whatever you're doing.